To keep yourself updated, subscribe to Indigolearn and click the bell icon and download our app OneFin to start learning on the go.
So now we have understood how to create CRR, what are the sources of creation of CRR, and we also saw a problem where we were required to maintain a minimum bank balance. Now sometimes students get confused as to when should we use the face value, when should we use the issue price, right? For that I will be taking certain scenarios, running you through those scenarios for a better understanding as to when should we consider face value and when should we consider issue price for calculating number of shares, right? So first, it's a very simple scenario. We have a balance sheet, equity share capital of 1 lakh, preference share capital of 50,000 and free reserves of 80,000, and we have sundry assets of 1,60,000, cash at bank of 70. The total of balance sheet is 2,30,000. Now assume we have to redeem these all preference shares, the 50,000 worth of preference shares at 10% premium. We have to redeem preference shares at 10% premium. Now what is the value of redemption? The value of redemption will be 50,000 multiplied by 1.1, right, because we are giving it at a 10% premium. So the redemption value will be 55,000. Now this is the amount that you would need to pay to the shareholders, right? Preference shareholders need to get 55,000, and let's assume there is no requirement of minimum bank balance. There is nothing mentioned about fresh issue. Everything has to be done from the existing balance sheet. Now the moment you see that 50,000 worth of preference shares have to be redeemed, the first thing that should strike your mind is, if there is no fresh issue, we need to create CRR of 50,000, correct? If there is no fresh issue, we need to create a capital redemption reserve of 50,000. How will we create that? From this free reserve of 80,000, we will remove 50,000 and create a separate account called CRR account. So let me do one thing. I'll create one capital redemption reserve which will be worth 50,000. Now what happens to this 80,000? 50,000 has been transferred to CRR. So 80 minus 50. So originally we had 80,000. Now 50,000 is gone. We are left with 30,000, right? What happens to these preference shareholders? We have paid them 55,000. 50,000 of preference share capital. So this becomes 0. 5,000 of premium which will be provided from the profit and loss account. So this will be 25,000. And from the asset side, 55,000 of money has gone out. So 70,000 minus 55,000, if you do, you are left with 15,000. So 1,75,000 this side, 1,75,000 this side. If you carefully observe the movement of funds, 50,000 of liability is gone, an additional 5,000 was paid. So 55,000 has been reduced from this cash balance of 70,000, which takes us to 15,000. And on the equity and liability side, what has happened is, preference share, the liability of 50,000 is gone, and in addition 5,000 of premium was paid. So a total of 55,000 has gone out, 50 from here and 5 from free reserves, and out of 80,000 we have kept aside 50,000 as capital redemption reserve. This is a base case scenario. This is a normal scenario. Now complexities arise when new shares are issued, or there is a requirement to maintain a minimum bank balance. Now in this case the bank balance has come down to 15,000. The question may ask that the bank balance should not fall below some specified number. Let us say the question has mentioned in this case, at least you should have 50,000 in your bank account. So what is the requirement? Minimum balance should be 50,000. Now if I attach this condition to this question, first scenario we have understood, if I attach this condition to this question that I need to maintain minimum balance of 50,000 in my bank account, how much do I have? I have only 15,000 after redemption. So where will I get this balance amount? So 50,000 minus 15,000, I need 35,000 extra. Where can I get this money from? I can get this money from sale of investment. No information has been given. If asset sale was given or if investment sale was given, we could have sold investment and got the money. Please note, here we have sufficient amount to create CRR. On the free reserve side, there is no problem. We have 80,000. We can create the entire 50,000 as CRR. But because we do not have money, we may issue equity shares. Correct? Because we do not have money, we may issue equity shares. Say for example, we can issue equity shares at a price of 20 per share. So what is the issue price of equity share? Let me just note it down here. Issue price of equity shares is, let us say, 20. 10 rupee of face value, 10 rupee of premium. Correct? Now, how do I compute the number of equity shares that needs to be issued? Do I need to bother about CRR? I don't need to bother about CRR because CRR requirement is already satisfied. I already have 80,000 in my free reserves. So I am not issuing equity shares for CRR purpose, but I am issuing equity shares to maintain a bank balance, to maintain minimum bank balance in my account. And what is the balance required? 15,000 is left. If I redeem it as it is, I need minimum 50,000. So there is a shortfall of 35,000. So shortfall in bank balance is 50,000 minus 15,000, which is 35,000. I can issue each share as 20. So how many shares should I issue to collect 35,000? See, the thinking has to change depending on what is the requirement of the question. If it was from the angle of CRR, which we will come to it in the next scenario, we would have taken only face value. But here, I am saying I need 35,000. How will I get this 35,000? By issuing shares at 20. So how many shares should I issue? So the number of shares would be 35,000 divided by 20, which is 1750 equity shares. Please note that in this case, we are bothered about bank balance. We are not bothered that we don't have free reserves. We are bothered that we don't have money. And to make sure that we have sufficient money, we are issuing equity shares. Now, because we have issued equity shares, what would happen? 1750 is the number of shares that has been issued. Face value would be 1750 multiplied by 10 and premium would be 1750 multiplied by 10. Right? Now, to this extent of 17,500, there is no requirement to create even CRR. Just link these points. We have issued equity shares to take care of our bank balance, and it is also giving us cushion for creating of CRR. So after all of these transactions, what would happen? You have issued equity shares worth how much? 17,500. So this will be originally 1 lakh plus 17,500. It becomes 1,17,500. Preferentials you have redeemed fully. It became 0. Coming to free reserves, there are multiple adjustments. First, we will tackle the securities premium part. We got 17,500 of securities premium. Correct? We got 17,500 of securities premium, which will be shown under reserves and surplus. Now, coming to CRR, I am not required to create CRR of 50,000 because out of 50,000, 17,500 is coming from fresh issue of shares. So my CRR will be 50,000 minus 17,500, which has come from fresh issue of equity shares. So how much is that? Only 32,500. So my free reserves also, the reduction will be 80,000 minus 32,500 minus 5,000 of the premium which I am repaying on redemption. So this becomes 2,10,000, a total on the liability side. Come to the asset side. We have got 35,000 from fresh issue of equity shares. We will add to this. So it is 70 minus 55,000. You will add 35,000 from fresh issue. You get 50,000. Right. Now here if you see, we were required to maintain a minimum bank balance, and hence we had to issue equity shares. And to compute how many number of equity shares will be issued, for that purpose we have to consider the issue price, because you are bothered about the amount, you are not bothered about the face value. we are bothered about what is the amount that will come to my bank account. Now in this case, what I will get is 20 per share is what will come to my bank account, and hence I will consider 20 per share to compute the number of equity shares that is to be issued. Now let's do some changes to this example and see when do we consider the face value for calculating the number of shares. Now in the same case, let us assume that free reserves are only 30,000 and sundry assets are worth 1,10,000. We have to redeem preference shares worth 50,000 at a premium of 5,000. Now how much of CRR needs to be created? We need to create CRR for 50,000, right? Because for the face value of shares we need to create CRR. Do we have sufficient money or do we have sufficient free reserves to create CRR? We have total free reserves of 30,000. We need to create CRR of 50,000. Is this sufficient? No, it is not sufficient. What is the shortfall? Now you may quickly compute and tell 50,000 minus 30,000, 20,000 is the shortfall. But if you look at it carefully, this 30,000 is actually not 30,000. 30,000 and you have to provide for 5,000 of premium on redemption of preference shares. So you are left with only 25,000 and CRR requirement is 50,000. So 50 minus 25, there is a shortfall of 25,000. Don't make this mistake in the examination. Please provide for all expenses, all losses, all premium payable on redemption and then check what is the balance. So for us, the balance will be 30 minus 5, 25,000. We need CRR of 50. So there is a shortfall of 25,000. Right? Now this shortfall can be made good by issuing fresh equity shares. Now for the purpose of calculating how many shares should be issued, will you consider the issue price or will you consider the face value? Once you get the answer to this question correctly, there will not be any confusion. Now please note here, we are issuing shares because CRR requirement is not being fulfilled. There is a shortfall in the free reserves and hence we will issue shares to make good the CRR requirement, and for this purpose we can consider only the face value. In the earlier scenario, we had issued shares because we did not have money. Now to calculate how many shares do we need to issue, we need to check from every share how much amount will we get. We will get 20 rupees per share. So accordingly we will consider the total issue price to calculate the number of shares. But in this case, because we are issuing shares for CRR, we will consider only the face value to calculate the number of shares. So issue price is 20, face value is 10, and so what is the shortfall? We need a CRR of 50, but we have only 30,000 here, and out of this also 5,000 will go towards premium. So there is a shortfall of 25,000. Number of shares to be issued will be 25,000 divided by 10. I am repeating once again, because we are issuing shares for CRR, we will consider the face value for calculating the number of shares. So that becomes 2,500. Now let us see how does the balance sheet look like after redemption. Equity we have 1 lakh already, plus we have issued 2,500 shares multiplied by 10. That gives us 1,25,000. Then we got premium also, right? So 2,500 of premium for into 10. 20 minus 10 is 10. So 25,000 is the premium. Preference share capital is 0. Free reserves 30,000. Out of this 5,000 is towards premium on redemption and 25,000 is towards CRR, and we will create capital redemption reserve of 25,000. Now coming to cash at bank, we had 70,000 plus how much amount will we get when we issue 2,500 shares? Now though we are considering face value for CRR purpose, we will receive the full amount. Investors will pay us 20 per share. So 2,500 into 20 per share, the total comes to 120. Out of this, you will pay back 55,000 to preference shareholders. So you need to remove that minus 55,000. That becomes 65,000 cash at bank, right? So this is how you need to check the CRR requirement and calculate the number of shares that needs to be issued. Now let us do one more change to this example. Let us say that free reserves is 30,000, cash at bank is 30,000, okay, and there is a minimum balance requirement of 30,000. Okay. So, let us again revisit this question adding these two conditions. One, there is a current cash at bank of 30,000, and two, there is a minimum balance requirement of 30,000 that needs to be maintained. Okay. So, if we change this balance sheet out here, so here instead of 110, let us assume there is 150. Okay. So, 180 and 180 is matched. Now, let us see how does this example pan out to. Now, there are two things we need to check. One, minimum bank balance. Second, CRR requirement. Okay. First, let us check the CRR requirement. For CRR requirement, again, as per earlier case, 50,000 is the, redemption value. We have free reserves for 30,000. Out of that, 5,000 will be towards premium on redemption. So, we are left with 25,000, which is the shortfall. 25,000 is the shortfall. Now, because 25,000 is the shortfall, we will issue 2,500 shares. Okay. Now, let us add some computation here. Opening bank balance 30,000. Okay. We have understood that, taken that in the question. 30,000 is the opening bank balance, right? Then receipts from fresh issue. What is the receipts from fresh issue? Based on this calculation on CRR, we will get 2,500 into 20. Redemption 55,000. So, to calculate closing balance, opening balance plus whatever you have received 50,000 minus 55,000, you get 25,000. And then there is a shortfall here also. There is a shortfall here also. So, by issuing 2,500 shares, though you will meet the CRR requirement, you will not be able to meet the bank balance requirement. So, we need to also check, to meet that bank balance requirement, how many shares do we need to issue? To meet that bank balance requirement, how many shares do we need to issue? Now, for that, you have to do a separate type of a calculation, that is amount required for redemption is 55,000. Amount required for redemption is 55,000. Add minimum balance that you need to keep with you is 30,000. Correct? Minimum balance that you need to keep with you is 30,000. Means the total funds that you should have is 55 plus 30, 85,000. Okay. Funds that you have, existing funds is 30. Funds needed from issue is 85 minus 30, which is 55. Now, you need 55,000 from fresh issue. So, number of shares to be issued will be 55,000 divided by, now here you are calculating in terms of amount needed. You need to maintain the bank balance. You have shifted from CRR requirement to bank balance requirement. So, you will calculate with 20, you get 2,750 shares. Here we had got 2,500 shares. Now, here we have got 2,750 shares. You will have to issue higher of these two. You will have to issue higher of these two. If by issuing 2,500 shares, your minimum bank balance was maintained, then this computation was not needed. But because bank balance is not sufficient, now we have to issue 2,750 shares. Now, coming to how the balance sheet looks like after issuing these 2,750 shares and redeeming the preference shares, how does it look like? Let's have a look at it. Equity share capital, you have initially 1 lakh, right? To this you got 2,750 more shares at 10. 2,750 more shares at 10. Why at 10? Because for increasing the equity share capital, we will consider only the face value, right? Then preference share capital is 0. Now, free reserves, we will come to it after some time. Securities premium 2750 multiplied by 10, which is 27,500. Now, when it comes to capital redemption reserve, we have to see how much is to be created. Total face value of redemption minus total face value of fresh issue, that is 2750 into 10, that comes to 22,500. Free reserves will have some balance now. 30,000 minus 5,000 for premium minus 22,500 for CRR. So it has a balance of 2500, and coming to the asset side, 150 was the opening balance. Cash at bank you have to maintain at 30. So opening balance was 30 plus fresh issue 2750 into 20 minus redemption 55,000, 30,000. So you have 180 this side and 180 this side, right? Now the only thing that you need to be careful when you handle these kind of problems is you need to check, are you computing number of shares from CRR perspective or from bank balance perspective. If it is from CRR perspective, you have to calculate using face value. If it is from bank balance perspective, you have to calculate using the issue price. And then if there is a conflict kind of a situation, you have to see whichever is higher, those are the number of shares that are to be issued.